Welcome back to Squawk Box. The suspension of the most extreme tariffs on China having a big impact on the outlook for Fed rate cuts. The market zooming higher this morning. Senior economics reporter Steve Leisman joining us right now. Steve.
Good morning, Andrew. Yeah, futures markets have quickly priced out a summer Fed rate cut after the U.S. deal with China for a 90-day extreme tariff pause, pushing ahead the first cut to the fall and eliminating a third rate cut from the Fed this year. So the probability of the first cut coming in July fallen to 43% from 69% on Friday. September is now priced with a 79% probability of that first cut. A second cut now in October, just barely priced in with more confidence that it happens in December. And the third cut in December, right out, as Monty Python would have said. Markets clearly bet that the Fed would meet the stagflation threat by ignoring inflation and just addressing weaker growth. The Fed last week throwing some cold water on that idea, saying risks to both higher inflation and unemployment had increased. Well, the risk to both this morning would now seem to be lower, though not necessarily disappeared. A key question, says Evercore ISI, in our mind is whether businesses have seen enough to look through the uncertainty as well and move ahead with hiring and investment decisions. Well, we get the CPI tomorrow. That should still only show some modest tariff effects. That headline comes in at 0.2 versus 0.1. The core 0.3 versus 0.1, but the headline comes down nicely to 2.3. That's well within the Fed's target range for the CPI, but the core remains just a touch elevated at 2.8. So some tariff-related price increases will still hit the economy, with showing up maybe as soon as tomorrow. 30% tariffs on China, still high. Uncertainty extends 90 days into the future, but clearly recession chances have to be lower now, and it would seem the possibility of lower tariffs on our other trading partners have now increased. Andrew?
Okay. Steve, thank you for that. We're going to continue this conversation. I'm curious what Mohamed El-Erian thinks of all this. He's now at the table, Chief Economic Advisor at Allianz, President of Queen's College at Cambridge University. The markets are liking what they're hearing right now. It's a 90-day reprieve. The next 90 days super volatile, or do you think it's a nice straight line?
It's not a straight line, and you're going to be really frustrated when you hear the opinion of economists like me, because you're going to be reminded of President Truman asking for a one-handed economist, because there are so many issues in play. What we know for sure is the first thing you've heard is whatever your probability of Fed cuts was, now it's fewer cuts and later. And what we know for sure is that economic activity over the next 90 days will be higher than it would have been otherwise, if only because people want to exploit a short-term window. Beyond that, you have all sorts of questions that have to be resolved. You have to figure out not just the economics, but the politics and the national security implications of all this.
Explain this, though, and I think this was a question Joe was trying to ask Scott Besson about. The idea that we were supposed to have, it was that we were going to see in the economic numbers a sense that there had been a paralysis that had changed capital investment, that had changed the way the consumer was behaving. There are still economists out there who say, we're going to see it in the numbers. We're going to see it in the, we just haven't. They're surprised they haven't. They say, oh, no, it's not this month. You got to look in June. You got to look in July. Will we see that?
The answer is, I don't know, but I suspect so. The soft data has collapsed. The hard data has been incredibly robust. And that's why economists who look at the soft data extrapolate from that. Economists that look at the hard data extrapolate from that. My own gut feeling is we will get some slowing in the economy. We will get some higher inflation. But most CEOs will remain in the wait and see. Let's see what happens after 90 days.
What does that do to employment, though? Because that's something else that we think is what Jay Powell would otherwise be watching.
Yeah, I don't think we're going to get any spike in unemployment. I think CEOs are just waiting. They don't want to take any major decisions that has longer-term consequences. If you lay someone off and it's wrong, you've got to find someone else, retrain them. So any decisions that have longer-term implications, people will wait for now.
Mohamed, you were really dovish on inflation, and I was like needling you that you thought 3% was okay. You said 2.5 to 3, and you said the only reason there are 2 is because of what country decided on 2?
New Zealand in the 1990s.
You said that's just the New Zealand rate. So now the tariffs, going to be a 90-day pause. So the prospect of the tariff, the inflation caused by tariffs is taken off the rate. Why immediately say that the growth side looks better instead of saying oh, there probably won't be inflation. Why doesn't it free the Fed to lower rates since they don't have to worry about inflation and lower mortgage rates, get the economy in case there is some hangover from this and unemployment? Why not preempt it? Why not do it since inflation is not a problem?
So the inflation impact is ambiguous. So beforehand, we had a total embargo on trade,
With China.
With China. And the result of that is that a lot of activity wasn't going to take place. Now you're going to have some activity taking place, good for growth, but it will be taking place at a higher price, bad for inflation. This is why there's so many different forces in play. I think the major question you have to ask yourself is, if you were a CEO, Joe, what would you do? If you had to have a major decisions, what would you do right now?
Well, I'd bring everyone back 5 days a week. That's the first thing I do.
I would do that too. What else would we do beyond that?
I would definitely, not have any relationships with anyone that worked at the company. I think that would be my second. Isn't that important? And you mean actual strategic moves?
So what you're hearing now, for example, is in the past we realized that our supply chain should be C+1, China plus somewhere else. Now we think it should be C plus 2 or 3. Now, if you go down that path, then that means rewiring supply chains.
Right.
I mean,
how much of it comes back to the United States? Does it foster investment in the United States, or is that just to try and keep the Trump administration happy?
No,
and if it does, so what?
I think if you get clarity from the administration that our real goal is revenues and reshoring, which means that tariffs will stay high permanently, it comes back. If, however, you hear them talk about a fairer trading system, and we have escalated to de-escalate, then you don't bring it back.
Let's say we have a 10% tariff across the board, and that's sort of almost like our version of a VAT. I know they're not the same, but what would that ultimately do in terms of bringing in revenue? Would you be happy with that? Would you think that would actually create a real damper on economic movement?
So it will not bring in massive revenues. Companies recalibrate but will not reshore. 10% is not enough for companies to reshore.
But they're just going to move to other countries, potentially.
Certainly, people are going to have much more diversified supply chains.
And we can decide that's a good thing. Inflationary in the short term, likely.
Correct. Inflation in the short term, deflation in the long term. That's absolutely the case on that, yes. So this is why you will get really frustrated as more and more economists opine, because there's so many possibilities right now. When I was here last time, I told you we are on a very bumpy journey to 2 destinations. One is fragmentation, and the other one is the U.S. is stronger in a fairer trading system. We are now slightly higher on the second probability, but it's a 50-50 situation.
You missed $58 oil, $57 oil. That's another reason why inflation might not.
Correct.
Right.
Correct. And also,
you think
rates are back up.
Does it stay here at 63, or is it possible it was supply and goes back down, or this is a knee-jerk?
So it will depend on President Trump's visit to 3 OPEC countries.
Yeah, that's coming up.
And see what happens there.
Mohamed, I want to thank you for joining us this morning.
Thanks for having me.
Big morning, big moves. Squawk Box coming back with more of those moves after this.
Let's get some more on the Treasury Secretary's comments this morning on the trade agreement. Eamon Javers is at the White House. Interesting, Eamon. Later this morning, he also framed the April 2 levels as a ceiling and the current levels as a floor.
Yeah, fascinating, Carl. Treasury Secretary Scott Bessent said on CNBC this morning that the deal reached in Geneva over the weekend is just a pause for 90 days, and negotiations are not going to be easy going forward. But he said that both sides are approaching the talks with respect and a recognition that they have mutual interests. He also said there's going to be another meeting in a few weeks to get rolling on what he called a more fulsome agreement.
Now that we have brought these very high tariffs down to 10%, I think the markets, business people live in the future. So I think we can go through at that 10% baseline, which is very easy to calibrate with.
Bessent said he was encouraged that the Chinese are now serious, in his words, about stopping the flow of precursor drugs to fentanyl, which is one of the president's key priorities in the bilateral relationship. And he said that the U.S. does not want a generalized decoupling, but instead wants a decoupling around strategic supply chains that are critical for the American economy. So a narrower goal there. The statement released by the two countries came just after 3 a.m. East Coast time, with both countries agreeing to temporarily suspend most most of the tariffs between their economies. The so-called reciprocal tariffs will be cut from 125% down to 10%. In the U.S., 20% tariff relating to fentanyl will remain in place, leaving a total tariff rate of 30% on China. The pause is set to begin on Wednesday, setting up a 90-day negotiating period between the two countries. And guys, that is going to be an intense period of negotiation. We'll see where they land.
The other comments, he talked about this at Milken as well, Eamon, but mentioned that the deregulatory phase of this sort of evolution of the economy will start to kick in Q3 and Q4.
Yeah, and you've heard Bessent sort of pitch ahead, really, past the tariffs into tax cuts, which he's very focused on, and into deregulation, right? And so what he's trying to argue here is that, you know, we are having a sort of disruptive moment with tariffs, but there are other things for the economy that are coming from the Trump administration that are going to be beneficial. And so he's really keen to make sure that investors are focused on those things as well.
Eamon, you were reporting it towards the top of the last hour, of course, on the executive order in terms of pharma and trying to lower drug prices. And we did go through this at the end of the Trump administration, I believe, and a lot of it got went to court, and they got injunctions and the like. Can you explain what they actually can accomplish here in the near term in terms of immediate effect on drug prices, or is this something that's got to play out over a period of time and ultimately needs legislation?
Yeah, it's going to have to play out over a period of time, David. And officials briefing reporters on a conference call just a short time ago were a little bit vague on sort of what their authority is to do this. But it's clear that what's going to happen now is they're going to set up a negotiating period of time between HHS, Health and Human Services, and the pharmaceutical industry. And then at some point, if the administration doesn't like the prices that are coming out of that negotiation, then they're saying they're going to move forward with regulatory rulemakings on the pharmaceutical industry. So I guess the key here for the pharmaceuticals is to see what they can get out of that negotiation. You know, can they give something that is sort of minor enough that they feel like they can live with it, and the administration can declare victory on lowering drug prices? That would probably be the sweet spot for industry. You know, industry has been pushing back on this idea for years, and now it looks like the president's intent on moving ahead to the extent that he can. Obviously, you know, you could end up in court on all this and see where that lands.